Here's how I'm planning to make more than $100,000 trading strategy options by risking just $7,000 with more than 1 to 20 risk reward ratio. As you can already see, we have a screenshot from strategy.com, the official website of my co-saver's company, MicroStrategy, which has renamed to just Strategy. But what I want you to look at is the MNAF, which is simply the premium you pay extra by owning MicroStrategy, which is basically a proxy of Bitcoin. And to explain it simple, let's say if you own just 100 shares at current $182, this means that you should spend around $18,200. And basically what this premium stands for is that if you are if it's currently at 125, you're supposed to get this much money minus 25% in Bitcoin in your shares. It's pretty simple. If you wrap your hands around it, it will make sense. So, what I'm currently holding with Strategy and what I'm planning to do with it. I have purchased 3 strikes with different expirations. The first one being the May 15th of May, which is just a couple of days, almost 2 weeks until expiration. At 200, I also have same strike, different expiration for July, and I have one which is very high strike, out of the money. It's $300 with expiration in December. And what I spent for all of them, I paid for the May one, the one expiring in May. I paid around $4, and I'm currently holding 9 of them. I have the July one, which I purchased cheaper actually than the one expiring in May. That's because I've been wonking strategy since end of 2025, and I have recently just purchased this one around $10. So the total, if you combine all of them, my purchasing price was around $7,000. And on the right side, I have placed my target profit. That's where I'll be looking to exit. For the May ones would be around $230. Originally it was much higher, but time went by and the expiration is coming closer with earnings about to be tomorrow for the company. But still at 2030 I would have there would be $10 in profit, meaning 1,000 per contract. I used to have 10, but as you saw in my interactive brokers account, now I have 9. But still 10 of them would be around $30,000. For the July one, I'm looking to exit further, with total profit for all of them would be around $130,000. And before you say that it's very ambitious, and even with some of my colleagues and partners in the trading desk, I've been trying to explain for weeks why being wonky strategy makes quite a lot of sense. And I was thinking about how to simply explain this in one video and in a couple of minutes, but since I was not able to explain to my colleagues who have some of them more than 15 years of experience, I decided to just simply pull out these seasonal statistics for the company. We're looking until months of May, June, and July for some of the expiration. We will leave the one contract, which is December, away. Now, keep in mind again that, as I said, I've been in this trade since end of last year, because you can see that there have been months back in time, like February 2024, when the company has been doing more than 100%. In March, another 60%, then another 40%. So the price is pretty volatile both ways as well. There have been months where the price has been losing almost 40%. But basically what we need right now is just, we are almost at the money with all of them. And I believe that 40 to 50% even in couple of days to weeks is pretty doable. And I want you to look closer at the rally back in 2024 from around the same level we are currently facing, being the 180 to 183. Or it actually went up by the time of recording, 185, let's say. It went more than 180% to almost $550 in just 24 trading days. So in my opinion, we can pretty easily face new all-time high by end of May. Also, there's many questions in between about Iran and just the geopolitical risks between China, US, Middle East, many others, but I believe this is pretty doable and pretty possible trade. And the last interesting thing actually about this trade is that the premium I told you about currently sitting around 125. The interesting thing is that actually this premium tends to go much higher. I have this indicator over here, which is not exact. As you can see right now, it says that the premium is 0.90 and we saw that it's not correct. But still, the logic behind it is the same. What I want you to see is that during big moves like here, this bull run we saw, this premium usually goes above 3 over here. And right now it's sitting at 125, as I said. And if it goes to 3, this basically means that if Bitcoin makes just 20% retesting some of the previous highs and breaking above the 200-day moving average, which would be around $95,000, strategy could easily make 60%. And that's the logic and mechanics behind the trade, which makes it so asymmetric. And with 60% would be easily sitting around the $300 zone. And again, I have purchased all of my calls much earlier at much lower price and my risk is much lower, but I believe still there is quite a long way for strategy to go up. With earnings approaching tomorrow after close, I believe we can see a big move happening just until end of this week. Last time we saw with the earnings, there have been a decline of almost 20% in the price. And what's curious is actually that over here, with last earnings in February, the premium I've been telling you about, which is currently 125 over here, has been at 0.9, which means you was basically getting more Bitcoin per share buying strategy rather than buying the actual Bitcoin. And that's it. Let's see how earnings are going to play out. And stay tuned for the other videos.